It's about how you look at things. Art is unique. For some, it's an investment that can hold its value over time. In the investment world, it also takes a lot of preparation, skills, and articulation in order to achieve the best results. Do we go for exotic, mass, legacy, or original? Here in Asia Pacific, one place is creating all that buzz with its massive potential: India. I'm Tariq Ahmad, and together with the Chief Investment Officer of Templeton Global Investments, Manraj Sekhon, we will be discussing the way forward with this powerhouse. Manraj, good to see you again.
Good to see you, Tariq. It's been a while.
It's been a while. The funny thing is that we live in the same country, but we never at the same place.
That's true, actually. That's kind of start to the year. There's so much going on in markets, so much going on in the business.
Manraj, in terms of your travels, so as a global CIO, covering many countries and sectors with teams spread across the world, we kind of come into this environment now where sort of globally there is some optimism in terms of growth, expectations of a soft landing perhaps in the US. But a key theme we're kind of picking up right now across Asia Pacific is this big India topic. There's a lot of buzz in terms of the reforms coming through, structural kind of changes coming in. How do you think about this from an investment perspective?
You mentioned traveling around the world, and it's always interesting to see what people are asking you about, what are the topical issues. Interestingly, India is a constant. So whether you're in North America, whether you're in Europe, certainly in Asia, there are a couple, but one theme, one country that keeps coming up in conversation is India, which is interesting. And I think this has been building up for a while. We've spoken about it. India is a story of a huge number of factors, a huge number of attributes, which we can dive into. India, from a portfolio management lens, whether you look at it from an Asia point of view, an emerging markets point of view, or a global point of view, was always a bit of something that's going to happen tomorrow, right? Something that's going to happen in the future. But I think that time has come. A lot of factors, bottom up, top down, macro, policy, geopolitics, technology have come together, which means it's interesting for the near term and for the long term. So it's definitely one of the strongest themes we're looking at.
So Manraj, one question I really have to ask you is about this theme we're seeing, a theme of globalization versus deglobalization. And sort of pre-pandemic, the world had become extremely globalized, right? Yes. I think dependency, supply chain, etc., in terms of how the world was operating. And we saw de-escalation soon after in terms of the world becoming more kind of insular, more independent, more deglobalized. And Asia Pacific has really sort of taken off in that theme, not to be deglobalized, to be independent in that sense, but the economies and what they've done in terms of development, etc., China, India, and you go into like Vietnam, for instance, you're seeing some great stories coming through. What is the India story that has really kind of propelled, to the points you kind of raise?
India's story with manufacturing, with deglobalization, as you describe it, began before COVID, to be fair. India's always been a services powerhouse. There's been no debate about that, whether it's IT services, global capability centers, back office, processing. That's always been a strength of India. What's always been a challenge is manufacturing, because of supply chains, because of quality control, because of skill shortages, lots of reasons. But what you've seen is a few things. First of all, more recently, post-pandemic, a lot of countries are looking at being less dependent on manufacturing from elsewhere, in particular China, and looking at bringing some of that manufacturing back home. So it's a dependency issue. And then with the China Plus One strategy, a lot of manufacturers from the West are looking at alternatives. And the usual ones that come up, other places in Asia, Korea, Taiwan, Japan, interestingly, Vietnam, and India. Now, what the Indian policymakers have done is they've put in place these so-called production-linked incentives, PLIs. So they're encouraging companies, local and foreign, to build manufacturing capacity across a range of areas. This is new. So we're seeing it in electronics, we're seeing it in smartphone technology, we're seeing it in semiconductors. NVIDIA recently announced their biggest global design center will be in India. They're building that out. And you're also seeing it in green energy. So I think when you look at the sources of growth in India, there's a lot of talk about consumption and demographics and financial services penetration. But the manufacturing one is a new story. It's still small. Let's be clear about that. It's not huge. it's going to take a very, very long time before India can compete with the likes of China. But from a very low base, it's meaningful, and the breadth of manufacturing is fascinating. Is going to be a key driver as well.
Just to kind of sort of weave into sort of some of the points you've raised, Manraj, valuation is the big topic, right? I mean, I think the normal theme, the question is really, is it a good time to buy India? But the valuation is always a bit of a question mark. How do you sort of address that sort of aspect?
I think for any investor, whether you buy into any market that you want to be in, and we look at things long term, right? We look at 3, 5, 10 years. If you take a long-term view, you have to ask yourself, where's your starting point? Are you starting with an allocation? Are you starting with a clean sheet of paper? And if you're starting with a clean sheet of paper and you believe in the long-term story, I think an allocation makes sense, because picking the entry points is very difficult. Coming back to your question about valuations, India's always traded at a premium to other markets. Now, why is that? India's got a lot of structural drivers, very attractive demographics, huge market, huge country, underpenetrated, underachieved in many ways for decades. So that long-term structural story drives a lot of the long-term growth. So just from a valuation point of view, the kind of variables you would input into your India story are going to be different from, say, the developed world. What's also interesting is the growth rates. So if you look at GDP growth rates, India's always been in that 5, 7, 8% range. And it's always been in that broad band. What's interesting is with what's happening around the world, including, say, China, East Asia, you're seeing growth rates recede elsewhere, but continue to grow in India quite nicely and even accelerate. So that gap between India's GDP growth and the rest of the world is widening. That is relevant for valuations. The other thing I would say is that when you look at the return on equity, valuations are valuations, price is what you pay, but value is what you get. When you look at the value you get in India, the return on equity has always been at a significant premium to Asia and to the rest of the world. What's interesting is that return on equity is actually widening. So what you're getting in terms of your extra dollar in India in your average stock, everything else being equal, is widening. So I would say, yes, it is at a premium. Of course, we should be wary of that. You have to be very stock specific in India. But when you break it down, I think there's good reason to explain that premium. And I don't expect that premium to go away.